Good morning, everybody. This is Cryptobud here, signing on for today. And if you have not watched my other videos, I really want you to watch that because I did talk about my all-in position for Bitcoin. And a lot of you guys have been asking me questions about what the heck that means. Why did you do it? Are you just getting in when we're starting to FOMO in? And as you already know from my channel, one of my largest calls in 2017 was Neo and Ontology. And when I did these all-in positions, I literally did all in. I mean, it wasn't something that, I just go ahead and say. It's when I have that level of conviction in these cryptos, it's because I do have that. And it's one of my, more, like I say, more stronger commitments to the crypto market. I've always believed in the crypto market since it first started, and I still believe in it despite the price declines. And so in today's video, I'm going to talk about why I went ahead and did that. Now, this is my fundamental section of it, and I'm going to explain to you line by line exactly what my thought process is. And it basically is going to outline exactly how I approach these stronger commitment purchases on my end. And, and what I'm really talking about is what's the underlying value of a token. And so for these last 2 years after this bull run that we've had in 17, we've seen a lot of this conversation about, is my token going to go back up to 1,000 or whatever it is? Is Ether going to go back to 1,400? Is Bitcoin going to go back to 50,000 or not 20,000? I correct myself. And, before we embark on that question of price, we need to understand exactly the valuation of these tokens, something that was not really set in stone in 17 because everybody had an ICO. Everybody had these tokens that apparently had a lot of value in its current year, but did not have what I call this monopolistic utility. Okay, so let's break this down for a bit, and if you stick with me next couple of minutes, I'm going to go ahead and explain this quickly. Now, a monopoly is, as you already know, one of the worst parts of capitalism on either the consumer side, government side, or whatnot. But in terms of the business, it's actually one of the more profitable aspects of it. And whenever I'm looking at certain types of investments, as an example, I always look for this monopoly feature. And crypto is in a very unique situation because there's a lot of little small monopolies that are emerging, or potential monopolies that are emerging. And just like in business, over time, that begins to get eroded either through regulation or through competitive advantages. And so when I'm examining tokens, such as like that time it was Neo and another time when it was Ontology in that space, I was looking for that monopoly piece. That's the part that I was really targeting, and thankfully it worked out very nicely. Neo at that time was at $7, went all the way to about 180. It was one of the top performers for that. So even though I had other tokens I had invested in, this token definitely took the cake, and I was really, really committed into that token as the price began to appreciate. Now, let's talk about Bitcoin real quick, because Bitcoin has, as you already know, been around for a very, very long time. It's one of the, what I call the first mover coins. And you already know this, and many people tend to trade their Bitcoin away into the altcoins, thinking that the altcoins are going to outperform in the short term. And the answer is it will. Sometimes it can. In the example of some of the other ones like Ether, decided to definitely have this outperformance. But before we go on to these other altcoins, let's talk about Bitcoin specifically. Bitcoin really has a monopoly, a hold on the crypto market for a couple of reasons. Number one, its dominance factor is over 50%, which allows Bitcoin to really capture a strong hold on the crypto market. It was the first gateway coin into the altcoin trading in 2017. And what actually happened was, prior to that, Bitcoin was really relegated to just using it to make payments via, traditional stores or online stores or whatnot. But what really changed the game was when Bitcoin was announced as a hedge against fiat in 2009 after the Great Recession. And what that led to was this idea that Bitcoin was the de facto cryptocurrency. It established a first mover advantage in 2009 so that it was the coin that people kind of went to. And because of that, it built brand. Now, if you think of monopolies as a whole, this actually really begs the question is how much Bitcoin's influence has had on the market since 2009. And in fact, it's held on to this monopolistic utility in more ways than not. The other part that was very interesting was after the 2009 Great Recession, there was a price discovery aspect to this. The price discovery that came after 2009 really was based off this idea that people could not really value Bitcoin correctly, meaning that if you were to buy Bitcoin when it was $100 or $200, you really didn't know what the potential was until people began to realize and begin to dream of examples of its use case. And in terms of Satoshi Nakamoto's white paper, this was really clearly evident because in that paper, he or she was indicating that Bitcoin was going to be used as a payment system. Now, whether it's for altcoin trading or for regular payment systems, it had its function maximized to its fullest potential. The other thing that was very interesting and more importantly cemented Bitcoin's price to ascent to 20,000 was the fact that Bitcoin was always paired in these altcoins. So in other words, if I actually wanted to buy some sort of altcoin, I always had to go through BTC at some point. Now we're starting to see that kind of break apart a little bit because you're starting to see some pairing that's a little bit different from Bitcoin. Ether pairs, stablecoin pairs, etc. But the point was, in 2017, that's what really gave Bitcoin's underlying value. So if I ask you right now is what exactly caused Bitcoin's price to rise to 20K, it really wasn't because Bitcoin was used as a payment system. I can give you countless examples of coins that could be used for payment systems, but Bitcoin really had a lot of these elements in play way before 2017. And the last part, which I think is the most important, was that this cemented Bitcoin's marketability because there was a lot of copycats leading up to 2017, which was Bitcoin Cash, Bitcoin Diamond, Bitcoin Lite, Bitcoin Gold, Bitcoin SV, Bitcoin, even Litecoin at that point was there. So when you start seeing these copycats, you begin to understand that this market really values this idea of Bitcoin's brand. So overall, I would say that Bitcoin's underlying value really depends on this idea that it has to maintain this monopoly in there. Now, currently this monopoly is being challenged because we do have things like stablecoins. We do also have other coins that can perform better with Bitcoin, but we'll talk about that in a little later. Now, let's go over to Ether's underlying value leading up to 17. Now, when I say I go all in on coins, what I'm really referring to is my strong commitment to monopolies, right? Because Ethereum, really what it comes down to is this idea that it was also a monopoly coin. One of them being that it was a gateway coin into the ICO market. For you to enter into the ICO, you had to trade Ether at some level. Ironically, Bitcoin wasn't really used as much. Bitcoin was used as a trading, but not so much as the entry into the ICOs, although there were some Bitcoin allocations that could have been made as well, but people by and large really used Ether as that. And more importantly, the developers and these ICO projects were really building on the Ether platform, so it was more natural to actually have that. And what you already saw was that Ether proposed something interesting in 2017, which was the fact that it was doing these smart contracts. Now, obviously, Ether was way past in development before 17, 14, 15, 16. But leading up to it, people didn't really understand what Ether's potential was as far as the ICO market. In fact, they had so many issues with Ethereum's initial coin offering is that it got hacked and there was a lot of scandals plaguing this. And so that really created a lot of confusion, a lot of lack of understanding for Ether's underlying value as Ether started moving into 17. The second thing about Ethereum was that it was considered to be a novelty coin. One of the coins with a very strong developer community, but at the same time, it was so new in terms of implementing this smart contract, and it kind of went against a lot of the same elements that Bitcoin had, is that it created a rift in the community. One being that it's an inflationary coin versus a deflationary coin. And the second thing was that Ethereum really had this idea of executable code onto its contracts. And so with all of these elements put in play, Ethereum really cemented itself as having this, again, first mover advantage. And that's why Ether rose up all the way to 1400 at the peak. And then obviously has come down a lot since then. And the second thing, very similar to Bitcoin, has been this idea of these copycats, right? We've had Neo, Arc, Stratus, EOS, Zilliqa, Cardano as examples of the new iteration of Ethereum, what they call the Ethereum killer. And as we already see in the space, I mean, it's very difficult to establish a platform coin, especially something where you've already had an incumbent inside the actual, platform competing with some of these newer ones. And so if I were to say, why did Ether have such a great run? It's because of that. And some of these smaller tokens really were just catching up to the monopoly, but they never really had a monopoly. And so when people ask me, are you still holding on to Neo? Do you still like Ontology? And again, these are great projects. But again, if you were to ask me in terms of commitment wise, the time of the market, the volatility, and all these other factors that play a role, obviously I'm still leaning towards the original incumbents because that's generally how it works. The incumbents generally have a stronger hold on them because they're the ones who gave birth to some of these other platforms. And the other one thing that made it Ethereum, very interesting was that, again, just like Bitcoin, it was a universal platform that people could build on, people can improve on, and whatnot. And so if you can identify these specific projects, you definitely have a huge advantage over it. Now, at the peak, Ethereum was about $134 billion market cap. Now it's currently trading at a $17 billion. So in terms of the upside potential for Ether to reach back to its all-time high, assuming that it regains back its monopoly, it's pretty much going to be almost a given that it will get there at some point. Now, with all that said, that's not to say that 134 billion has to be somewhere where I'm looking at Ether to be at within the next couple of weeks. But if you take a look at all the factors kind of led Ether to that point, nothing really has changed in the grander scheme of things. Now, my investment thesis overall for these type of calls that I make to myself and to obviously to people who are listening to me is, number one, is I always have this commitment to a very select core group of coins. I don't try to spread myself out to like 50, 60 coins. I try to look for projects that are very, very, that have these specific features. And more importantly, I let the price come to you or come to me. In other words, if the price is not good enough, I'm not going to go ahead and chase it. So rather than chasing, let's assume some of these coins that were pumping really hard last year or in 2017 or whatnot, I kind of let them kind of come back a little bit so that I could start scaling into these positions. And that way I create these opportunities when the market is not doing what it's supposed to do in a bull run. Now, this is a very different market than 17 and 18, obviously, because we haven't really had the volatility that we had in 17. So there's a lot of different strategies that come in play in the volatility of the market versus just looking at price alone. Now, what are the strategies for that, for which I go about in looking at some of these large cap coins? All right, the first thing is I always wait for the price to come. Okay, now I did that call for Bitcoin at 5,500 or 5,800, depending on what it is. And like I mentioned in that video, the one thing I always try to do is I try to accumulate coins. Now, when the market begins to really ramp up, that's when I have different strategies for FOMOing in. And I do FOMO into these coins because the market has given me that volatility that I need. The second thing, I always take a look at this in terms of if somebody would call me and say, please buy my project, that's the time why I execute. It's not when everybody says, I don't want you to come in because we only have a selected group of people that we're going to allow to purchase. At that time, I know that the project has already been overvalued. So if Ether comes up to me and Ether is really cheap, nobody wants it, that's the price, that's the time to buy into it. If I get a phone call and somebody asks me, hey, we have this really great project, we just don't have enough interest, but we have a lot of development on it, I probably will take a look at it versus trying to chase projects or try to chase these large caps when people are becoming very, very picky about who they want to sell to. The third one is I don't really have a buy list. People always ask me, what's your top 20, what's your 50 or your 80 or whatever it is. And I really don't have that because if I have a buy list, what happens there is that I actually end up being very biased to certain projects, and new projects that come in, I don't really give them the credit for that. So what I try to do is I look for the opportunities to come, and then I see the prices first to see how low they are. And if they are on discount, then I go ahead and buy them. I personally think that Bitcoin is at a discount at 5,000, 4,000, 3,000. Now, whether it goes down from 5,000 to 3,000 doesn't matter in the grander scheme of things because I'm not looking for that, protection. I'm not looking to buy at that exact bottom. What I'm looking for is 10 years out, 5 years out. What is that going to look like? And so basically, if I'm looking at those in terms of that longer time horizon, what I end up seeing is a lot more value than not. I don't expect the investments to outperform other years. So I don't compare 17 to 19 or 18. 17 was a very different year, obviously. 18 was a full bear swing market. And then 19 is more of like this accumulation pattern. So I'm expecting the risk and reward ratio to be a little bit lopsided in a 19 versus a 16 and 17 year. This very reminds me a lot of the 15 and 16 year that I was in crypto when, there was a lot of projects coming out, but, people just weren't interested in it. And because of that, I have to adapt to the situation. And so expecting a 20% return tomorrow is not reasonable, and it's not likely, and it's not reality. And that's the part where I have to adjust my perspective. And so when people ask me, well, how come, Bitcoin hasn't gone up 20% since you went ahead and talked about it, I really don't care about that because I'm not trading in this environment. This environment is not a trader's environment. Anybody who says it's a trader's environment is most likely misleading you, because there's no way you can get these 20% swings unless you're doing margin or something a lot riskier. And so with that said, I identify projects for the long haul. Now, once the market begins to move like it did in 17, if we do get another one, I personally don't know, and I don't really care. I'm not trying to predict these prices. What happens there is I begin to ride the momentum to the upside or to the downside, whatever that case may be. Now, a couple of reasons why I also believe that in terms of the overall market, why I'm strongly committed in crypto. And so one of the reasons why is because in 18, we saw a lot of selling pressure coming out from the VCs or the hedge funds, mainly because there were actually forced liquidations. If you have to understand that hedge funds don't really have a lot of flexibility, unlike us, where we have the flexibility to cut positions loose whenever we feel like it. We want to hold on to the tokens, we can. If we don't want to hold on to them, we don't have to. But VCs and hedge funds are a little different. What they have to do is they have to raise capital and they have to provide an ROI for their investors. And if they don't do that, what happens is that they get a call from an angry investor telling that they need to access those funds. So in many cases, we saw that also from the ICOs, how they were liquidating those projects all in 18 just to raise funds to keep the project alive. Now what I'm seeing is the opposite effect. I'm seeing projects that have completely exited. Other ones are getting, sued or whatnot. And what's happening here is that many of these funds have either been liquidated already, or in many cases, if they haven't liquidated, they're trying to hold on to whatever they have left just to keep the runway going for the next couple of years. Also, I want to mention is that we've had also this issue with BitMEX, this idea with margin calls on leveraged Bitcoin products, also Bitcoin futures, kind of pulling back a little bit on some of that. So a lot of these derivative products that were in play in 17 and 18 are now kind of getting pulled back a little bit. So with all that said, I mean, in terms of the forced selling, the liquidations, the margin calls, things like that, I feel that this environment lends itself for more downside protection than what it did in 18. It's because now you're starting to see a different crop of people purchasing these coins versus being these high speculative instruments that you see. And with that said, most people who sell at desperation, they usually sell regardless of price. They're not selling because Bitcoin's underlying value has dropped. They are selling is because they have been forced to liquidate their positions. And so because of that, my overall thesis holds on to these fundamental factors. And so when I look at the charts and I look at the different pieces that are coming in play, not just the news and not just from a reactionary standpoint, I look at it from a 1 or 2 year outlook. I'm looking at a trough here where Bitcoin's price, in my opinion, has bottomed out at about $4,200. $3,000 level. Now, whether I buy at 5,000, whether I buy at 4,000 or 3,000, for me, it does not matter, because within 3 or 4 years from now, Bitcoin's going to be a lot higher than where it's at right now. Now, I'd be very surprised, and I could be completely wrong, if Bitcoin goes down again another 50 or 60% in the short term. And that's perfectly fine with me, because overall, by and large, I'm not looking at trying to time the bottom. And I'm not trying to figure out where the price is going to be tomorrow or next week. That's almost impossible to do, as we saw this past week with the Tether situation. So the conclusion is it's very simple. Number one, price drops when there isn't an issue, when everyone's selling to you. So if everybody is selling, the price is technically going to not reflect the fundamental value of that crypto and of any asset. It's because they're selling for, like I said, in many different cases. The only time when I have to be worried about this is because when we have this FOMO event and the market has clearly gone to the upside way too much in a short period of time, which we saw in 17. More importantly, what I'm also seeing is the indications of very low volume in many of these exchanges, but I'm not seeing the low liquidity that people were predicting. And so what's happening here is that we have very low volume, in other words, low interest in crypto, but we have more liquidity now than what we had back in 2015 and 16 because we have more exchanges and we also have more of a global appeal for Bitcoin. Contrary to popular belief that these tokens are not really picking up their steam. So with that said, I always look at a couple of things. Number one, has Bitcoin's price changed, value changed since 15 and 16? Has it changed since 17? And to me, it's quite clear that it hasn't. In fact, it's actually gone up in value because now you're getting a lot of these tokens who are no longer going to be competing with Bitcoin, and Bitcoin's going to be picking up its monopoly one more time. Now, whether that monopoly is going to hold true for the next 10 or 15 years, I personally think it will. It has a very clear brand name. Its market cap is sitting at over 50%, which has not really dropped that much since in the past year. In fact, it's already up almost 30-40% from its bottom in about 3,000. And now we're getting this disbelief rally where people beginning to question whether we're going to break 6,000. And then you have all these different factors that lend itself to FUD, but the projects itself have not really changed, and the price doesn't really reflect that selling pressure that we saw back in 18. And so with all of this put together, I make my analysis and my conclusion, and I share that with all of you. But what's more important to me is my commitment to my thesis. And that's the part where I always say the news is kind of like the wind. It kind of blows one way and then it blows the other way. But I'm not here flip-flopping between either of those. I make a call, I go ahead and stick with it, and I see where it goes. If the call doesn't work, I'm not going to lose sleep over it. And if it does go up, then it's going to go up more than the loss. Obviously, can't hit home runs all the time, but if they do, they're going to move really, really large. And I do have other plans moving for Bitcoin once Bitcoin reaches my targets. Once those targets get put in place, I have another plan for execution moving over to the altcoins. And so that's another situation. And if you guys take a look at my last video, you can see that when I was looking at Bitcoin at that day, the day, a couple of days after Bitcoin went down, but the altcoins completely started collapsing right after that. So I made a call about moving over some of these altcoins because this is what I'm trying to see right now in terms of the trends. And so, you know, my understanding for this is if you've been in the crypto market long enough, you'll understand that these trends continuously evolve. But more importantly, the spirit of the crypto market is very, very consistent. And that's the great thing about this market is because as a trader, as an investor, as someone who believes in the project long term, I understand these market forces. And in many cases, they are very, very similar to some of the other asset classes. All right, guys. Well, if you're interested in more, join my Patreon group. That's where I kind of go into a little bit more detail about my market thoughts. I wanted to share this with you, all of you, and definitely press like and subscribe. Cryptobud out.